and southern parts it'll be a fine dry day. Good deal of sunshine to begin with, clouding over somewhat later on. But for Scotland, Northern Ireland and Wales, certainly the more central and southern parts, it'll be a fine dry day. Good deal of sunshine to begin with, clouding over somewhat later on.
Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts. We're going to look at a more longer term analysis. We're going to compare the cycles using a number of different tools and look at the idea of the extended cycle theory, and also take a look at the modified pi cycle top indicator and do some projections on that to see when we may get across and at what level that might happen at. A lot of different charts today. If that sounds interesting, stay tuned and let's get straight into the charts. We're going to compare the cycles for Bitcoin now, looking at it from the bear market low, also from the halfening, and looking at the total cycle from the previous bull market peak. So the first chart here is looking at the percentage gains here on the left from the bear market low, and on the bottom scale is the number of days here. And this is on a logarithmic scale, and we can see in red this is the 2013 cycle from that bear market low. We can see that it did take around 750 days from that point to peak out. We did have that mid-cycle peak around the 500-day mark. In blue here is the 2016-2017 bull run. You can see it took around 1,070 days after that bear market low, and obviously did take a lot longer compared to the 2012-2013 bull run here. And finally our current cycle from that bear market low in yellow here, and we can see we have passed the number of days from that previous cycle, and we're getting close to around 1,100 days after that bear market low. We were fairly comparable here on this bull run, and we did get ahead of the previous cycle here. Then we had that mid-cycle correction and long consolidation, and the previous cycle did get ahead of us on the percentage gains here. And we can see we have had this divergence here from this point where the 2017 end of bull run really started taking off, and at the same time our current cycle spent some time in the 60,000 area here, and then we did have this pullback recently with that dump to 42k. So it does look like we're diverging from the previous cycle here, but I think this can be a bit deceptive. And if we are going to have an extended cycle that goes a few more months into next year, then we could see this parabolic run at the end happen in the first half of next year. We can see we did diverge here with our current cycle and the previous cycle, and then we did end up coming back to a similar point. These two will look different along the way here if we are going to have this extended cycle. And I do think this mid-cycle pullback here with our current cycle in yellow was similar to that 2013 mid-cycle pullback here. But obviously with a lot longer cycle here, it happened further down the road, and it does become harder to compare it with this cycle on this time scale. But we will look at some other charts where we can compare these two a bit more closely. And just looking at that on a linear scale, we can see how different our current cycle is in yellow to the previous bull run here. Let's look at those 3 cycles again now, but taking it from the halfening date rather than the bear market low. See again the first bull run in yellow here, that mid-cycle pullback. And after the halfening date, it ran for about 1 year to get to that peak. And cycle 2 in blue here is that 2016-2017 bull run, and our current bull run here in red. So we can see the previous cycle after the halfening date did take around 520 days here. And with our current cycle, we are around 570 days. This cycle is taking longer, looking at it from the bear market low and the halfening date. Again, we can see we were ahead of the previous cycle here pretty much for most of the time until we got that mid-cycle pullback, and then the previous cycle has gone higher. I do want to point out in comparing the mid-cycle pullback in the 2013 bull run here to our current mid-cycle pullback and recovery, just how much time we did spend recovering here. But I will look at that in a lot more detail in another chart. Looking at that on a linear scale now, and just comparing the previous cycle with our current one, we see that similar divergence. We did have the explosive finish to the bull run. Well, in our current cycle, we've been consolidating between that 69k and 30k area. And finally, we're going to look at the complete cycle from the previous bull market peak. This is that 4-year run ending in 2017 in red here, and our current cycle in the blue. And this is just on the linear scale. And we can see we did take off a lot quicker here when using that as the starting point compared to our previous cycle. Then we had that mid-cycle correction and a long consolidation, and the previous cycle did end its parabolic run. Well, we are currently still consolidating in this range. And we're just going to zoom in on this now, looking at it on a log scale. And we're going to start it from around this area, just as we were starting this mid-cycle correction. So this was the mid-cycle correction here with the blue line and our current cycle, and the previous cycle in red. You can see that similar divergence between the 2 runs. But if we are having that extended cycle, then this parabolic run would be expected a bit later in our current cycle in the blue. We can see how different this cycle seems to be to the previous cycles, and it's interesting to compare them from those 3 different starting points. So now I'm going to compare the cycles side by side here using these fib extensions that we've been looking at. And these are basically taking the fib extension from the previous bull market peak to the bear market low. And this is on the log setting on the fib extensions and on the log scale on the right. This is our current cycle here, that previous bull market peak around 20k, the bear market low around 3100. And then we've added these extensions in. On the left is the 2016-2017 bull run. We've done the same extensions from the previous bull market peak to the bear market low. And we can see we did take off a lot quicker here in our current cycle, and we did get to that 1.618 level and then get that mid-cycle correction down to the 1.272 level. And 2017 had more of these regular 30 to 40% pullbacks along the way, rather than a quick run up and then a big correction in the middle. And although I think that we're doing something more similar to the 2013 bull run, we can see just recently with this run up from 30k and these 2 pullbacks along the way, there are some similarities with the 2017 bull run here. We did get a pullback around that 1.414 level to the 1.272, and then we came above the 1.618 and had a decent pullback here with this wick not quite to the 1.414 level. You can see we had these two pullbacks here in a relatively short time, and currently we did a similar thing on this recovery, going a bit above the 1.414, getting a pullback, going to the 1.618, and now getting another pullback pretty much also to that 1.414 level. So there are fractals from both cycles here, but now let's compare the 2013 bull run. So this is the 2012-2013 bull run here on the left, and we have the same fib extensions, the previous bull market peak to the bear market low. And we do see it's a lot more similar here. We had this quick run up in our current cycle like we did in 2012-2013, had this mid-cycle pullback similar to our current pullback at similar levels as well, the 1.618 down to the 1.272. And then we did spend quite a long time here consolidating between this area before we finished off the parabolic run to that 2.272 level. So we are doing something quite similar here. We did have that pullback from the 1.618 to the 1.272, and we did get back to that 1.618, made a slightly higher high, but we are still consolidating in this range. And although these were quite similar here on this run up, we can see just recently this looks more like the 2017 bull run towards the end with these more regular pullbacks. Whereas on the 2013 bull run here, we had one quick flash crash here down to the 1.414, not unsimilar to this current pullback. And then we did really start going parabolic quite quickly without any major pullbacks. Just interesting to compare the two cycles there with our current cycle. Now I want to compare the last part of this 2012-2013 bull run, starting from the halfening date, which is this white line here, and with our current run starting from around that halfening date also. But because this was a much quicker run here, and our current cycle seems to be a lot longer than that first cycle, I'm going to stretch this fractal over our current price, and that would give us something like this with the 2012-2013 bull run in yellow here, taking it from the halfening date here in white. So when we do match it up approximately here with this run up here and this mid-cycle pullback, I've tried to line up the mid-cycle pullback bottom here. We can see we did take a long time to recover here in this 2013 cycle when it stretched over our current cycle, and we did have that flash crash here with this yellow wick. We're having a bit of a correction now here also, but we can see when stretched over it in this way that I think we are getting closer and closer to where we do start breaking this 1.618 level and finishing off this bull run. But I do think it's going to take a few more months, and just looking at this fractal here, perhaps it's going to take 3 or 4 months into next year. And this is very approximate because you could line up this fractal in a number of ways. It could shrink it down more, it would change the price target. On a time basis, we can sort of get a general idea that this bull market might take a few more months. And just lining it up again in a similar way here, you can see that big pullback. I've just lined that up, and approximately the mid-cycle pullback. And if we were to do a similar thing like this, we could see this could go into a March, April here. But again, there's a lot of room for error when lining up a fractal like this. But just to give us an idea mainly of how long the mid-cycle correction did take in that 2013 bull run. And perhaps with the current bull run, that's why we're spending a lot of time between the high 60K area and the 30K area consolidating. And just to show that in another way, this is the 2012-2013 bull run on the left, our current bull run on the right. Got those same fib extensions. But just want to show here on the first cycle, the entire bear market from the previous bull market peak to the bear market low did take 154 days. And this consolidation here, from when we first touched the 1.618 level to when we closed above it, did actually take 196 days. So this entire consolidation took longer than the bear market precipitating the bull run. And doing that comparison on our current bull run, You can see the bear market here did take pretty much 1 year, 364 days approximately. And these are just estimates here with the amount of time taken to resolve this consolidation. This chart is mainly to show that the consolidation here did actually take longer than the entire bear market. So I don't think it's unusual that we're going to spend this much time in this range consolidating if we are doing a similar thing to 2013, a bull run. Perhaps we are forming an ascending triangle here, and we could just be coming back for the second touch here before moving to the upside to break that 1.618 level, complete the formation of this ascending triangle. Now this could always go a bit longer here depending on where we do touch this line, but I think this is definitely a possibility. And another way to look at it here, looking at more of a time-based comparison, and on the top here is the first cycle from the previous bull market peak in 2011 and completing one whole cycle to the next peak here in 2013. And this is our current cycle from that previous bull market peak at 20k. And what I've just done is with these green lines, I've lined up those previous bull market peaks from both cycles, and these white lines are the halfening dates. These are the bear market lows, but I've used these 2 points to line up these two charts. And we can see how similar they are here. Obviously, we took longer to reach the bear market low here, but we can see after the halfening, we have the 618 level here in the blue, and these fib extensions are the same as on the previous charts I showed you. We have the 618 here on the 2012-2013 bull run. We can see after the halfening, we got above that area. We had this quick run up similar to our current cycle, and then we spent a long time consolidating between the 1.618 and the 1.272. And when they are compared like this, we can see we've spent a similar amount of time here consolidating. So looking at it this way, perhaps we are getting quite close to having the end of this run. We do also see that recent pullback to 42k was at the 1.414 level approximately, similar to this pullback on this candle, which doesn't look like much, but was actually a decent pullback to that 1.414 level. It does pretty much line up at a similar time. This is the 2-week chart, and if we were to reach a peak at a similar time on this chart, that would possibly be in another 6 to 8 weeks. Just a few different ways of looking at this comparison, and the main point I want to make is the fact that we're spending so much time in this consolidation area isn't unusual when comparing it to the 2013 bull run here. Now I'll just zoom in a little bit closer to this mid-cycle pullback area, and again 2013 bull run on the top, current one on the bottom, and this was the mid-cycle peak and the pullback and the recovery, and this is our current cycle, mid-cycle peak, pullback and recovery. Just zoomed in a bit closer to compare them. I do have this blue line, which is actually the 786 level, not the 618 level. This is where we really started taking off quite quickly. We've got that on both charts and they are lined up. And I've also lined up here this big correction, which came back to that 1.414 level with our current correction to a similar level, the 1.414 level. They do look very similar. And again, this would show that we are getting close to starting to move back up and get above that 1.618 level. And once we start closing above that area, then we should see that parabolic end to the bull run if this fractal is to play out. Now let's talk about the modified pi cycle top indicator. The original pi cycle top indicator predicted the tops within a 3-day accuracy, and it did actually cross within 3 days of this, what I think is the mid-cycle top here. But I did modify this indicator so it did get the tops on the exact day, and that was for all of the peaks here, including the mid-cycle peak in 2013. But the interesting thing was it didn't predict a top on this mid-cycle peak here. They did get quite close to crossing, but we didn't get a cross, and then we had this big drop and correction. And we did find several solutions that get these exact tops on the exact day, and we put it into a band here of solutions. We can see all those different colors with the different solutions. So the two purple lines are one solution, the two blue lines are one solution, and so on. And this indicator is available on TradingView for those that don't know. And if you just type in Pi Cycle Top, it'll come up here, Pi Cycle Top Ribbon Mamo. But anyway, this is an interesting experiment really, by modifying it to get the exact tops and seeing how it performs in this current bull run. And as mentioned in previous videos, I'll rely on a lot of indicators. I don't put a massive amount of weight on this indicator. I do see it more as an experiment to see what happens. But either way, we're going to do some projections on this to see what would be needed for these lines to cross, what sort of price levels we would need to get to around an approximate time. And this would be an estimate and does have a wide range of error because we can't predict what the price movements are going to be, and it will make a lot of difference to what these readings are. And also for those that don't know, these are just a collection of moving averages. The top line here is a moving average that's after calculated is multiplied by 2. It's a pair of moving averages, and when they cross, it indicates the bull market peak. So to be able to do the projection here, I do have it all written up in Excel. So what I'm going to do here to do this projection is take the price action after the stock market crash here from this low all the way up to our peak here. And by using the closing price here, this low was at around 4,700. So I'm going to take this fractal and add it to this starting point, but I'm going to multiply all this price data by 10. So obviously this was 4,700, and multiplying that by 10 would be 47,000, and that's approximately at the price where we're at now. And pretty much add that fractal from the point that we're at. Obviously this is just a projection, but these lines are quite spread apart here, so it would take some quite explosive upside for these to cross. I'm going to do that projection based on this fractal to see what we would get, and all that data is written into Excel with the Pi Cycle Top indicator, and I've just added that data from this low to that peak, and again multiplying each of these numbers by 10. So what we see when we do that is this is where we are at currently on this pullback, and we've just added that fractal again from this point here onwards, just to see what it would take for these two lines to cross. And what we do see is it would take a whole year of this sort of price action, and we would need to get to a price of around 500,000, and that would be around the start of 2023. So it does raise some interesting questions about this indicator. As I said, this is an experiment to see what happens. We just made the indicator to fit the data to get all those previous bull market peaks, and that was the result. What we can see is we would need to have quite a long cycle here without a bear market, and that sort of momentum would have to go for a whole year. And if we were to do that, we would get to around that 500,000 target by the start of 2023. So about 12 months away for these lines to cross. So we'll have to see what happens. Do I think this is going to happen? Probably not. I think we're more likely to top out sometime maybe within the first 3 or 4 months of next year. I think it's easier to predict the price targets rather than the end date of the bull market. So either this indicator is inaccurate, or we're going to carry on the bull run for a whole nother year, grinding our way up towards 500,000. For me personally, I'm going to rely on this model here. This is our 2012-2013 bull run. This is our current bull run. And there are a lot of those similarities with the way that we did run up here and the resistance at the 1.618 with a big correction to the 1.272 like our current cycle, and this long time consolidating in these areas. And if we are doing something like this ascending triangle, then we are getting quite close. If we can get a bounce here and come back up to this 60,000 area, perhaps we're going to complete this pattern and carry on with the rest of this bull run. And the target would be around 200,000 here if we were to come to the 2.272 level like in 2013, and this could take several months into next year. I do think this is possibly just a long consolidation after a big run up like this, and in the 2013 cycle we did see that similar thing, and it did end with a similar run up to the first run up. So if we were to see a similar thing, we would be expecting these targets possibly in about 3 to 4 months. To invalidate that, obviously if we were to close below 30,000 here, then this would look completely different. Even in some other videos, I did say if we do close December below 40,000 area, then I think we may go into a bear market. But I also do think we are getting very close to a bottom, that I will put out another video looking at that in more detail. So that was a long one, but I hope you enjoyed that analysis. Give you a bit of perspective when comparing the cycles, and also what could happen with the pi cycle top indicator for it to be correct in this bull run. So thanks for watching. I hope you enjoyed that long-term analysis. I'm Bitcoin Mamo. I'll see you next time. Bye.